Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. Okay, so last week I prefaced my commentary here and in a way summed it up as well with the words I said this situation was not going to last. However, it has only been until this week that I fully started to appreciate how the two bearish influences involved in this market not only managed to rip each other to pieces, but still pressure prices lower at the same time. You see, the mid-June to early August bearish shift pitchfork, highlighted in dark blue on my daily chart, had shown the bearish angle of attack of this market, especially as prices over the last 5 weeks moved down to test the lower time, currently at 18,000. We also had supports dating from 2019 and 2022 between 18,230 to 18,850 zone that were challenged. I said last week, and I quote, however this pitchfork was last week, so that's 2 weeks before, being ripped by the forces from another pattern, a sister if more recent bearish shift pitchfork. The August-based bearish pitchfork highlighted in bright green on my daily chart, and that's the end of the quote. This bright green pitchfork had since late August until the last 3 weeks also shown the bearish angle of attack, but only for the more recent action. It was when the upper tine of this bearish pitchfork met the lower tine of the original mid-June to early August bearish pitchfork 3 weeks ago that both pitchforks started to suffer. As I said 2 weeks ago, and I quote, let me make this quite clear. Right now, neither of these pitchforks are going to come away from this crossover without some serious injuries, end of quote. And so it has proved to be. I'd also like to gently remind you of my comments from 5 weeks ago when I spoke about the mid-June to early August bearish shift pitchfork, and I quote, until prices break out and below the lower tine and properly by an absolute minimum of 2 consecutive closes below the tine, then this bearish shift pitchfork will run the angle of attack of this market, end of quote. Well, 2 weeks ago we had 3 consecutive closes below the lower tine. So why I'm not highlighting this in a positive way? Well, the reason we had these moves and closes below the lower tine was simply because the market was getting stretched between the dark blue bearish pitchfork and the more acute light green bearish pitchfork. Eventually something had to give way, and I thought last week, reasonably enough, that the market chose the older mid-June to early August bearish shift pitchfork as the preeminent bearish angle of attack. I even looked to retire the newer bright green pitchfork for this week's commentary, but alas, no. By the middle of last week, the market had started to hesitate at the support of the October 2019 high at 17,815 and finally broke down through it late last week, but only just as far as the June 2021 low at 17,095, where it has so far stabilized. This also caused the market to re-enter the bearish bright green pitchfork, but not for long. I will keep both of these pitchforks on the daily chart for another week, but I suspect they may no longer be valid, as the market seems to be using the nearby lows and highs from from a few years ago as support and resistance levels. Thus below, watch out for the May 2021 low at 16,610 and the 2021 low at 15,665. As I said 2 weeks ago about some of these, as well as other supports below, which have now turned into overhead resistances, and I quote, I have a strong suspicion that some, if not all of these, may well be tested in the not too distant future, end of quote. These same suspicions apply, again, this week as well. LME 3-month zinc. Okay, so 2 weeks ago we had a huge daily key reversal up, which despite its best efforts did not quite make it to be a more strategic weekly key reversal up or even an outside week. How does that relate to what happened this past week? Well, looking at the slightly bigger picture, this market exited an April to mid-June bear channel into a shallowly rising bull channel from mid-June to mid-August. It then exited that into a third pattern, a late May to mid-August bullish Andrews pitchfork, which morphed into the present pattern, a bullish shift pitchfork for the same move. To me, even now, it is too shallowly bullish for a bullish shift pitchfork, but it is still there, and I've highlighted it on my daily chart in bright red. This is not a perfect pattern by any means, but it is still driving the market gradually higher between the middle time below, currently at 24.84, and the upper time above, currently at 26.48. However, in the even larger strategic picture, the market, despite rising since the May lows, is still within a very large May to August 2022, that's right, a pattern that is over a year old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. We're at the moment between the middle time below, currently at 22.52, and the upper time above, currently at 27.88. I just wish to further emphasize how this bearish shift pitchfork, which is now well over a year old, and how it is still working in the overall bigger picture to drive prices lower despite recent moves upwards. I wish now to discuss the recent somewhat contradictory nature of this market, perhaps seen as indecision, but on a bigger scale than just this daily chart, though we just might be seemingly sorting the situation out now. You see, in the last week of September, we had a weekly key reversal up that almost made it as high as the descending long moving average, currently at 25.99. Yet the very next week, we had an immediate countering weekly key reversal down, the one that led to the break of the bullish Andrews pitchfork and morphing into now shallowly bullish shift pitchfork. This, to me, I saw as indicative of some longer-term indecision in this market, much as the recent bullish shift pitchfork counters the longer-term 2022 dating bearish shift pitchfork. Then we had a monthly key reversal down for October last week, which has not seen any real inkling of a move lower since. However, the big daily key reversal up 2 weeks ago seemingly spurred on a move higher, as prices are now not only moving higher within their various pitchforks, but we are seeing the market mixing it with the declining long moving average overhead, currently at 25.99. We last saw any interaction between these two at the start of October, and back then the market really shied away from testing it. However, this time prices are now really mixing and testing it in amongst the congestions of the February 2021 low at 25.47, at 26.01, and at the March 2021 low at 26.26. Finally, I'd like to repeat my last sentence from my commentary from 2 weeks ago and was repeated last week, and I quote, "I continue to keep an eye on the bunching together flatlining medium moving average, currently at 24.60, short medium moving average, currently at 25.01, and short moving average, currently at 25.05. These three moving averages are too close together for my liking and for, I believe, the health of the market." And that's the end of the quote.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.